Hey guys, Stock Saturday, and it's a flat week, fairly sort of quiet as it happens. Not made too many sort of buys and sells, but yeah, it's sort of China week in the news. So let's have a look. So Tencent released their results, and this sort of a theme with Chinese businesses in this sort of quarter. In that sort of 2022 was still a fairly sort of crappy year in Q2, so sort of most companies are looking good in comparison. But yeah, whether they're sort of strong going forward is another matter. But yeah, they're looking year on year, total revenue up 11%, and they sort of split that down to social networks up a little, domestic games not doing too well, international games up 19%, which is pretty good. Advertising up 34%, which is nice. Fintech up 15%, and other, which is very, very small, down 10%. So that's not really sort of a huge issue. Up on the quarter as well, sort of slightly more stark. Online advertising 19% up just on last quarter, which is very, very good. But the gaming side sort of not doing quite as well. From the first quarter, 9% down on domestic and 4% on international. And yeah, slightly down on last quarter's revenue. So yeah, it's partly down to currency effects from the looks of it. So they give a few highlights on the gaming side. Domestically, Naruto Mobile sort of doing pretty well, hit all-time high daily active users after 7 years of operation, which is pretty good in Q2. And Valorant sort of doing very well in China on PC, and they released a new game, Lost Ark, which is an MMO, and yeah, that's doing pretty well. Internationally, Valorant doing well, PUBG Mobile as well. So yeah, gaming side looking good. Quite like that they give you this little breakdown of gross margins sort of between the various businesses as well. So the overall gross margin has been sort of picking up. Most of these sort of bottomed in sort of the end of 2021, which is quite interesting because it was sort of the top of the market for most companies. But yeah, overall gross margin sort of 40% and has sort of risen quite steadily up to 47.5%. So that's very good. Value added services, which is your sort of gaming side and app side and that sort of thing, up from 48% to 54%. So that's what really sort of drives high margins. Online advertising was sort of very low, surprisingly, in first quarter 2022. I guess that was lockdowns and sort of China not doing all that well, but has risen to 48.9%, which is very, very nice. And fintech and business services sort of risen from 27.1% at the bottom to 38.4%. And finally, just sort of capex and cash position. They sort of barely spend anything. Operating capex up from last year, but sort of 2 billion to 3 billion RMB, which is obviously not a lot compared to the total business. And cash flow looking pretty good compared to last year, but is quite a bit down on last quarter. And then sort of cash, there's sort of largely the same as last quarter, up from last year, but debt up a little bit as well. So they're sort of up on, or they've gone into net cash again where they were in debt last year, but is sort of down from a slightly higher cash position. They're not really the sort of company to hold a huge amount of cash like Baidu and Alibaba, so they tend to run sort of fairly lean, so you get great big percentages like this, down 44% since last quarter, but they rather invest it. So speaking of investment, I quite intrigued that they're pushing further internationally, and they've bought Techland, the company that makes Dying Light, which is pretty good, or they're becoming a majority shareholder at least. So not really a fan of Dying Light particularly, but it's another international studio. And then, of course, in Tencent fashion, they're saying that they're going to leave them alone and sort of do their thing. But with sort of a little bit of backing and sort of money injection, they want to turn Dying Light into the ultimate zombie game experience. So that's incredibly vague, but they've got to say something about this acquisition. So yeah, I thought that was pretty good news, even if the game isn't really my sort of thing, but it's more international studios. And then next on the list was Lucid Games, acquired by Lightspeed Studios, which is a subsidiary of Tencent. This was sort of looks similar to Sumo Digital that they bought. Really, they're sort of a nuts and bolts sort of contract worker studio. Basically, they don't sort of make huge games themselves. It's a little bit sort of misleading to say, they work on. They're known for their titles: Apex Legends, Sea of Thieves, Star Wars Jedi Fallen Order, which they're not really their titles. Obviously, these are, EA titles and sort of various other companies. But yeah, they sort of, it looks like they do a bit of work on each of them, a bit of contract, something that the main studio wants to sort of farm out. But it's sort of given them basically a bit of an in to the major sort of publishers, which I think is pretty good. Similar to what they do with what I thought they got with Sumo Digital, which I thought was pretty good. They sort of worked with Microsoft on Forza and sort of various other big games, and it just sort of strengthens Tencent's ties to the big publishers. So that was a nice acquisition. It doesn't say how much it is, but yeah, I'm sure it was a reasonable amount. And then lastly, they bought Visual Arts, which seems a little bit of a strange acquisition. They sort of do mainly visual novels, Air and Clanad, which are sort of not really my sort of thing, but if you're into that sort of thing, then fair enough. But seems a strange acquisition for sort of the gaming side, but it's entertainment, I guess. So yeah, it's a reasonable way to spend the money. I'm sure they've done their research and it's a reasonable buy, or sort of they think they can do something with it. So yeah, fair enough. It just seemed a bit of an odd buy, but there you go. So moving on to Alibaba, sort of similar story really. Numbers looking reasonably good. Nothing sort of blowing the doors off, but it's again sort of comparing to a rough 2022. So the numbers are sort of reasonably well up. 14% overall revenue, 70% operating income increase from last year. Adjusted EBITDA. They don't use EBITDA for some reason. But yeah, adjusted EBITDA 32% and net income 63% up. But yeah, you can't really sort of take too much into this. I should sort of check on 2020. 2020's numbers, I suppose, and 2019, just to sort of see how they're growing. But this isn't really sort of a huge position for me. I'll probably come back into a little bit more detail with them sort of later on, really, if I want to sort of grow this position. But yeah, I just sort of had a quick look through. They break it down and sort of most of the sectors are sort of growing reasonably well. International commerce retail was sort of doing particularly well, and the sort of local services, smart logistics network and that sort of thing doing pretty well. And digital media is sort of quite a small part of the business, but that was growing. So yeah, some of this again will be currency effects. Their currency has sort of got weaker. Looks like it's going to be getting even weaker. But I guess that on paper will provide sort of profit increase and potentially stock increase. So yeah, could be a silver lining really. Slightly sort of disappointing their cloud side isn't really sort of growing all that much. Increased 4% year on year, increase in profits, but yeah, you'd sort of expect with the growing sort of cloud side, it might be doing a little better than that, but yeah, can't have everything. And then the balance sheet always sort of looks pretty good. Cash up a little bit. Short-term investments down. Overall, current assets is sort of up reasonably well, 33 billion RMB, and sort of total assets up a bit, liabilities down a bit. They don't have very much debt at all, so it is basically net cash. So quite nice. You can knock that off the sort of valuation if you want to. If you sort of prefer not to, then fair enough. I think they're sort of reasonable value either way, but it's just sort of not a position I really wanted to expand, to be honest. It's sort of the more retail, commerce side, which isn't really sort of my area. I kind of prefer the sort of Tencent side, even if they are a bit higher valuation. But there you go. And then Baidu, which is sort of the one generally most people don't tend to go for. People seem to look at sort of JD and sort of Meituan and Alibaba and Tencent, but Baidu sort of I think are maybe a little bit underlooked. Sort of much smaller company. But yeah, they've had sort of decent revenue growth, 9% quarter on quarter and 15% up for the year. Profit sort of doing really well again compared to a poor last year. Sort of fair enough. All the adjusted numbers seem to be a lot higher because of a sale, so there's not really too much to sort of read into that. It's probably best looking at the real sort of net income numbers, which net income is slightly down, but yeah, you sort of come to their individual segments and it's sort of looking pretty good. They're sort of introduced their AI chatbot Ernie, trying to sort of give it a Western name, of course. So yeah, don't really know how that's sort of gonna develop over time. I'm sure that needs quite a bit more time to sort of flesh it out. The self-powered open source deep learning framework, the AI cloud. A little bit speculative, not really too sure what to make of Chinese AI, but there you go. Intelligent driving, though, which I think is sort of very surprising. They've done 714,000 rides in the second quarter, up 149%. So they're now up to 3.3 million in total. So again, it's in China and it'll be sort of approved by the government and on sort of particular roads, I'm guessing, and sort of the health and safety side is maybe a little bit more lax in China, but Tesla sort of saying that they're 10 years ahead of everyone else, even in self-driving cars, just think is a little bit wrong. Baidu have got cars on the road actually giving people journeys, and yeah, I think you have to commend them for that. And then similar to Baidu, really, balance sheet sort of looks pretty good. Cash down a little bit, but short-term investments up far more. So current assets is up a reasonable amount. Total non-current assets not moved, and sort of liabilities largely the same to down. So they do hold quite a nice net cash position, which is very nice. So that is the China week, basically. China as a country are looking sort of rather soft and sort of declining potentially, but I would just imagine that will lead to more stimulus and sort of devaluing currency, which is all kind of good for the stocks, really. So yeah, I think maybe the country's not going to do quite as well, but the stocks should sort of outperform. And obviously with Tencent, they're moving sort of more outside China, so that should see a reasonable bump. So the news for the week, not too much happened on Monday and Tuesday. Wednesday, you sort of had some PMI numbers, which for the UK certainly looked quite awful. These were provisional, but manufacturing PMI was 42.5, which far lower than expected, and sort of under 50 would be contraction. So 42.5 is sort of indicating recession, really. So that weren't very good. Even services under 50, that was expected to be 51. So whether this has any, well, they are provisional as well. So if they are real, then whether that has any, bearing on interest rates and whether we are going to go higher, we'll have to see. Europe as well sort of had theirs, and they were slightly worse than expectations. Not quite as bad as ours. Certainly on the manufacturing side was a little better than expected, but still pretty low. But yeah, that was a little bit of a surprise. Then you had the US come out with theirs, and it was sort of better than ours, and Europe, but still sort of below expectations. So manufacturing under 50, and the sort of global and services around 50, where they were expected to be sort of reasonably positive. That was largely it until the Jackson Hole symposium today, or yesterday if you're watching on Saturday. So Powell sort of, as expected, came out and sort of said the job's not done, inflation's coming down, says headline CPI is misleading and it shouldn't be looked at. We should be looking at core PCE, and more importantly sort of the last few months, last 3 months annualized core PCE. He says that is proper inflation. So yeah, the sort of headlines that come out of inflation, just as the one word they call it, is down to 3%. They mean headline standard CPI, and he's saying I don't agree with it. So yeah, I think you have to sort of look at what they're looking at basically to try and gauge a prediction if you're going to make one. So yeah, that was his sort of speech, basically saying higher interest rates for longer, probably not going to be rising very much at all. It may be sort of 0.25% rise, but basically just saying we'll hold them there for longer until core inflation comes down. So portfolio for the week, as I say, sort of very quiet, not a huge amount of moves for the week. No buys in the invest account, no buys at all in the ISA. Still got the little bit of cash, about 6.5k of cash in the sort of money market fund, earning a little bit of interest, but haven't really sort of felt the super urge to be selling off the last of this just yet, and probably adding to more of my gold and silver miners and CleanSpark on the Bitcoin side. It's sort of coming quite close to my average cost here. Average cost in the other ISA is the sort of mid $2, so that's a little bit worse in here. As a combined position, it's sort of $3 or so. So if we do get sort of one last push down on Bitcoin, could see maybe back into the $3 under $4 range. So yeah, I might might then sell that last of the money market fund and sort of top up, ready for the next sort of couple of years run, really. Expecting a sort of decent move in gold and silver and on the crypto side. So, yeah, we'll have to see what happens there. Yeah, not a lot happened at all in the IG side, and I have been adding more options. So I deposited £1,000 last week, and sort of have been spending that sort of just a little bit at a time each day. Generally, I'm now up to 52 contracts on Core mining in sort of various times. I'm not going to sort of list them all down here, but sort of generally long term, sort of end of 2024, some even end of 2025, of course. And then Clean Spark bought a little bit more. These are all sort of end of 2025 generally. Equinox Gold bought a little bit more, sort of end of 2024. And yeah, Fortuna and Himax sort of not bought anymore, but they're sort of smaller positions. I'm kind of tempted on Himax to maybe add, but I can see why they're sort of low. They do a lot of business with China, so if China are potentially slowing down, then yeah, maybe they're not going to sort of see that business, or whether they would benefit from stimulus, who knows. So yeah, I'm still going heavy into Core and Clean Spark and Equinox, really. So yeah, leave your thoughts in the comments below and like and subscribe. See you soon.